All right, I like to start these things with a quote, and today I have making good judgments when one has complete data, facts, and knowledge is not leadership, it is bookkeeping, D Hawk. And I think Stacy Stanley Young is the right person to talk more about that. Stacy Stanley Young is the founder of Stanley Young Business Strategies. She draws from 2 decades of corporate accounting experience. Her company offers streamlined corporate accounting services, helps businesses navigate financial complexity without a full-time CFO. Now, beyond her personal life, she's a dedicated mother, active in cycling, Dungeons and Dragons, and Girl Guides leadership. Stacy, how are you today?
I am doing well. How are you, Zivko?
I'm pretty good. I'm very excited to talk about this one because I know a lot of people think they know bookkeeping or accounting. They mix both as well. So I think there's a lot of stuff that we will talk about that will be very beneficial, not just for me, but for everybody out there listening. Now,
Yeah.
first, I want to understand a little bit of how you got to be, a bookkeeper. How did Stacy Stanley Young Business Strategies kind of became?
Well, I think like any person, the road is paved with lots of obstacles, and obstacles are just opportunities, right?
Yes.
So, accounting was something that I got into actually in high school. I took the accounting class. I really enjoyed it. Um, it took a few different university classes, decided to go back to accounting because I thought that that was most interesting. I personally was actually on the path of becoming a CPA. And then life got in the way. We had not one, not two, but three family crises happen all at the same time. And I went, I can either focus at home where these crises were happening, or I could focus on the school that I needed. And I had to pick one. And so home it was. But I've never left. I've always worked in that accounting field. I've always had amazing mentors that saw something in me and said, come on down, I'm going to teach you how to be a controller of a business. You have the background, you have the education background. Now let me give you the reality, because theory and reality are often very different. A few years ago, 8 years ago, I had an opportunity. I got laid off from a job. They ran out of money and had to lay me off. And I stood there with my pink slip in hand and went, I either apply for a new job or maybe I take advantage of my experience, and had the opportunity to open up my own bookkeeping firm. The original intention was I was going to work 3/4 time, spend the rest of the time with my kids. I'd go around the city with my briefcase and my laptop and do bookkeeping for businesses that needed that corporate accounting knowledge, but didn't need it 40 hours a week. They needed a half a day. They need a day a month. They needed much smaller time frames. Well, I think that lasted about 6 months before I realized how desperate business owners really were, um, and how much trouble business owners got themselves into. You see a lot of advertisements from the accounting softwares. I won't necessarily pick on any one of them. They all do it, who say, oh, look, we have artificial intelligence. We can hook your accounting software up to the bank feeds and it can practically be done for you. And I have built my business on fixing all of the problems that the AI does because um, it it wasn't necessarily properly managed.
Got it.
And
Uh,
yeah.
when you're explaining when you're kind of going over this whole journey of going down to be a CPA and choosing the path of starting your own business after you got laid off, do you have this idea that it will be like a quarter of the time, not even half, like just kind of walking around going to businesses, talking, and then starting to talk with so many small business owner and understanding that, like you said, they got themselves into trouble. And I think that's the key thing that people kind of don't want to accept that reality. We, as business owners, make decisions, and then we go to someone like a bookkeeper, an accountant, and say, "What do I do?" We want to escape that responsibility. Do you, in your experience, when you started in the beginnings and nowadays, do you see that business owners make those decisions because they made wrong assumptions or because they got wrong advice from their business buddies?
Yep. Both. I don't know how many times I'm talking to my clients and the answer comes in, okay, Stace, I was talking with my buddy and they said, and I'm like, who are you going to believe, the expert or your buddy? And I'm always willing to listen because there's so much information out there that I can't know it all. So I'm always willing to, okay, well, what did your buddy say? Okay, well, now let's look at the tax laws. Let's look at the reasons why we're doing this. Let's look at um, what's actually going to be beneficial to you as opposed to half of the story. Let's pull open the rest of it. And a lot of business owners get into business because they love what they do. They get excited over a product that they're going to make. They love making soap. They love making candles, and they're going to do that. And well, the data entry is just data entry. That's not really the interesting part, but it's so vital. If you don't know what your cost is, you don't know how to price your product. A couple of years ago, I was working with a new entrepreneur and he was just starting up his business and he was a fabulous graphic novel artist. Fabulous. Then he sat back and goes, well, I was thinking of selling these for about $5 because I can't, $5 a comic and whatnot. And then we said, okay, well, let's get into your cost here. How much is your graphic design? How much is your coloring? How much is your printing? And it came down to, it was going to cost him $19 and some odd cents to print each one of these comic books that he was selling for $5. And he looked at me with no idea because his expertise was in the creating of the story, the drawing of the graphic novel, and he learned that at the beginning of his business rather than busting his butt for 3 years and not understanding why he wasn't making any money.
Oh, now, it's interesting to hear you talk about like the costs, true costs, and that side of the business. Now, I think there's a lot of misconceptions that I want to start addressing right away because people kind of get these confused bookkeeping, CFO, accountant, CPA.
Mhm.
You started talking about your experience with the entrepreneur that you helped them with cost, true cost, how much you should sell it and stuff like that. Today's time, you as a bookkeeper, how far do you extend in helping the business? And at what point do you say at that point is no longer within bookkeeping?
For me or for all bookkeepers, because everybody is coming to the table with different expertise. Some bookkeepers stay very much in the lane of, I'm going to do the data entry, I'm going to reconcile your bank account, and then you can take those financial statements off to an accountant. Because of my experience in the corporate world, I go a little bit further. I turn around and go, what are these numbers telling us? Bookkeepers are going to be the first line of defense for any business owner. They talk to us on a weekly basis. They talk to their accountant once a year, maybe once a quarter if they really have a close relationship with their accountant. So we tend to turn around and go, what are these numbers telling us? Where are we going? With the cloud-based solutions that we have these days, it is entirely possible to be so up to date with your bookkeeping that we're practically no longer dealing in the past with historical transactions. If you upload your receipts today, I can get to them tomorrow and you can have your books up to date up to today. We're no longer looking at last month and whatnot. That data is so very important because we need to see history. We need to see how much does it cost to, how much is your lead acquisition cost? How much is your cost of manufacturing? How much are your salary costs? Um, but we need to look in the future. We need to know things such as, hey, did you know that the minimum wage is going up in October? Hey, did you know that I deal a lot in the not-for-profit and charity. In fact, that's where our specialty is. So I'm always looking at 6 months, a year? How much is this whole project going to cost us? Can we go out to find grantors? Can we go out and find funders? But if we don't have that information, we can't do that. So I get into those weeds because my executive directors, my business owners, rely on being able to make good, effective decisions.
That's amazing. So, and that's why I asked that question because I've heard in the past and I've seen that where a bookkeeper basically does your reconciliation, which is like eating dry sand for me. I don't enjoy reconciliation. And at that point, they say, "Thank you so much. Talk to you next month," and just send me the bank statements where you explain a process where you're so much more involved in COG, in cost per acquisition, in salaries, and all these things. Now, you did mention that you specialize in not-for-profit charitable organizations. How did you stumble upon that niche?
I think I've always been I've always been community minded. You read right off the top of this session today. I'm a Girl Guide leader. I'm 45 years in. Um, uh, it's a part of me. It's who I am. I grew up going to church. Being part of that community was a part of me, and giving of myself has always been something that is what's done. So 8 years ago, when I started Stanley Young Business Strategies, I went into it going, I know I know the rules, and I'm going to give a little bit of myself. And I started off with, I'm going to do a little bit, but of course it's going to be in the for-profit side because that's who needs me, right? And then what it really came about is that charities are kind of these unique things. You could be so small, but the rules and regulations in the bookkeeping is different. Not everybody knows them. You can get yourself into a lot of trouble. And if I can take my talents and give back to an organization so that that executive director can go out and feed the hungry, help the youth, save the environment, then I'm doing my part.
Wow. And you said like even from the beginnings, you were always community driven, and that's kind of where that passion kind of continue to help charities and not-for-profits. I feel like when most charities and not-for-profits hear about like a specialized bookkeeper, probably they'll look at their books and like, oh, I don't know if we can do this. At what point do you feel like a charity should look at a bookkeeper? At what size? At what should be happening to be like, look, you're at a point where you really have to look at this because we can take it to the next level so you have a bigger impact.
I was the treasurer of a post-secondary theological college. I would show up at their board meetings. Oh, and I got talked into being the treasurer. The former treasurer was a friend of mine, and then he's like, great, you're here, and walked away. And so I kind of got the job. But that was a really good learning experience too, because I would sit around this board and be very intimidated because every person who was on this board had a minimum, a master's degree in divinity. I'm I'm just a bookkeeper, right? But I was able to give them something that they didn't. They said, we're an expert in our thing, which is theological studies.
Mhm.
And it wasn't until I came to them analyzing the books and I tried simplifying it and saying, this is the reality here, people. We don't make money on an annual basis. And the chorus that I would get back would be, we need to save. We need to save. What can we save on the office supplies? Can we save on that? And when you walked into the building, you saw that that's really the mentality. At one point, the secretary said, hate to spend the $100 on a chair, but mine just fell apart, like literally fell apart. And I'm like, get a chair. But when I was able to turn around and say, well, where is our spending going? And it was a really simple analysis. Salaries cost us this much. The cost of the building cost us X. And then when I did a percentage, I was able to go back to the board and say, 75% of your costs come from salaries. So we can sit here and continue to talk about saving money, But unless you're going to have a serious conversation about which employee we're firing, I think we need to redirect to that conversation. And for the first time in years, they were starting to talk about how to bring in more money rather than how to reduce the costs, because but no one had looked at the books in that way before. And so I think trying to do very simple calculations like that, we're able to go to the board and we're able to then say, you guys can do what you want, but here's what I'm seeing, and you need to redirect this conversation.
I see. So it's more of a someone on that board having the time, the skills, the knowledge to look at and to analyze the finances, and then to make a rational decision what will be the right thing to do to have the biggest impact with the mission that the organization is on. And once you started that kind of that niche that's focused on helping more community driven or organizations, what do you see as like the first, like you open the door, Stacy, there you go, a bunch of documents. What do you usually see are the first obstacles that charities and nonprofits have when it comes to bookkeeping?
Bookkeeping, accounting is never going to be the department in any organization that is going to make money. And so executive directors, owners will turn around and look at the accounting department and go, how can I get it cheapest? The accounting field, and accountants and bookkeepers are very different. They travel in different lanes. The How do I say this? The accounting profession is a little bit more regulated. The bookkeeping profession is not regulated. Anybody can call themselves a bookkeeper. Zivco, this afternoon, you could turn around and say, I had a wonderful conversation with Stacy. I would like to be a bookkeeper. And you can go out and you can put up your shingle and you can say that you're a bookkeeper. That is scary to me, because there's a lot more to it than just connecting the bank feed and sucking in those transactions. But owners, managers, executive directors turn around and go, and especially in the charity, they go, yeah, but how can we get this as cheap as possible? Because I want to be good stewards of the money and I don't want to spend it frivolously. And when they see my quote, they turn around and go, oh my gosh, that's a lot of money. And I go, yeah, but what is it costing you not to have it done and not to have it done properly? And in fact, we can save people money ultimately because they're not redoing the work. The audit at the end of the year, because charities go through audits, is much cleaner, much neater, and therefore, in theory, doesn't cost so much.
I see. So it's more of kind of understanding there is a balance, that it will never save you money. It's something that will cost you, but because of that, you invest it properly. When you do the annual audit, all these things will start to make sense, because bookkeeping is just part of the whole experience. Now, you said it's very scary for you that you can see that anybody can become a bookkeeper. Have you heard any, or have you seen where you're taking over someone that kind of did a really, really kind of messy job? What do you usually see as like red flags? If you can tell an organization like an executive, hey, listen, if you see XYZ happening, red flag, you should look at a different bookkeeping company or a different bookkeeper.
If you look at a set of financial statements and don't understand them, that's a red flag. Whether you're the business owner, if the bookkeeper can go, well, I entered all this stuff, but I can't explain to you these financial statements, that's a red flag right there. If I look at different parts of a financial statement and I'm expecting to see a positive number and I see a negative number and I can't immediately explain that. So if you came to me and said, well, Stace, yeah, I have this negative number in my sales, but that's because I just gave a big discount or I just gave a refund, that's explainable.
Mm-hmm.
But if I turn around and go, Zivka, why do you have this big negative number? And you look at me and go, that's a problem, right? Yeah. Sorry, we're on a podcast. So if you look at me and shrug your shoulders, that's a problem, right? Um, those would be red flags. If you can't trust what you're looking at, that's a red flag. Um, yeah,
If you're looking at the financials and you're second guessing, or it's like unclear, or if you have a negative number and the explanation is kind of like you're like, I don't buy it. I really don't remember this. That happens once, twice, three times. You're like, okay, you're kind of setting yourself for a disaster. Maybe not at the end of the year, maybe next year you need to redo a lot of stuff. And because
Mhm.
charities and nonprofits are heavily regulated, there will be an audit.
Well, absolutely, absolutely. If you're in a charity and the auditor is looking at you going, that if you look at the end of the year and you get a whole bunch of adjusting entries because basically that auditor had to turn around and do all of that bookkeeping, that's a big red flag, and that's a problem. If you are, and throughout the year, if you are looking at your financial statements or you ask for financial statements and they can't, it's the 10th of the month and they can't give you financial statements from the month previous, that's a flag. Now, I say that very cautiously. There are some cases, for example, I hired a bookkeeper, but I wanted to save some money, so I told her that the 20th was good enough rather than the 10th. But you should be able to I should be able to have all of the information I need to be able to close the books and to be able to give you up-to-date financial statements up to at least last month. If you go to somebody and they say, well, I'm 4 months behind, why? Why are you 4 months behind? And now, in some cases, the executive directors are a little uncompliant in getting the information that the bookkeeper has asked for. Again, it comes down to, is it explainable? If the answer is I'm 4 months behind and I don't know why, then we have to look at a new bookkeeper.
And these are really interesting pieces because I feel like a lot of people probably heard that story. They were just like used to it, like, yeah, we're just like 4 months behind or 3 months behind and stuff like that. But you're painting a different picture. Like this is kind of the average, and this is what you should be aiming for and seeing it. And if you're not, then think about it again and kind of watch for some of these red flags. Now, when it comes to um, regulations and when it comes to doing the books properly, there's a lot of misconceptions about tax write-offs and a lot of misconceptions about shell companies and all these what do they call it in a nice way, cash preservation or something like that, whatever they call it, but basically just tax evasion. What do you see as the like top three or top four misinformation? Like it's completely false, but you keep hearing it all the time, and you need to like retell the story day in day out. Like what are like three or five top ones?
Okay, so let's start with sales tax, GST, HST. There is a rule. You do not have to register for GST or HST until you have reached sales of $30,000 in a year. People misapply that rule and go, oh, but I didn't earn $30,000 last year, so I just didn't bother charging GST. Well, once you're registered, you registered. Whether you earned that a dollar, whether you earned $1 million, you're registered and you need to charge that. And oftentimes people are coming to me after the year is done, and I'm like, well, now I got to change all of these numbers because you didn't charge it, and you can get into some trouble. And that, of course, in certain provinces that have PST is the same thing with PST. So applying the rule, hearing a rule, and then misapplying it or misunderstanding the whole picture, not just the rule. That bookkeeping is just data entry. Um, if you I realize that it's really hard when you're a new business owner and going, what do you mean I have to spend $500, $600, $700 a month on bookkeeping to pay somebody? But if you don't know those numbers, how do you know how well you did in that first year? Yeah, the tax that an organization would end up paying at the end of the year, the corporate tax. We had a client once and we said, okay, you're a sole proprietor. As a sole proprietor, I want you to always look at that net income number, multiply that by 30%. That's the amount that you're going to end up paying in tax. And they come to me and they go, I don't want to pay that in tax. I'm going to go out and buy a whole bunch of stuff and expense it to my company. And I go, well, hold on here. You've just spent $1 and you no longer have that dollar to have. I would have rather paid the tax and had 70 cents left after paying the tax than missing out on those deductions. And again, with that sole proprietor, they sit back and they go, how can I reduce my income so much that I'm not paying any tax? And I go, again, that's no problem. We can do that. Don't go trying to apply for a mortgage, because what you have also done is shown that you have no income and you haven't had income in a number of years. And so there are bigger, more long-term things that need to be remembered. Goodness. Okay, so that was 2. Let's see if I can think of another one. Oh, here's another big one. Especially for business owners who are just starting out. And I'm going back to business rather than charities. Charities have a different rule, but I'm just starting out my business. I had to buy a whole bunch of equipment, which meant all of my cash went out the door. And I go, yeah, but now you have income, because the assets that you have just purchased are assets to you for years to come. So that's going to sit on the balance sheet, which means the cash may have gone out the door, but you're not going to see that expenses all in one year. It's going to be divided as depreciation. You're going to see a little bit every year. And so I've ended up with a few business owners who have been in trouble because they have thought, oh, this is a big expense to me. And I sit back going, but it's not. That's not the way that accounting works. And we have to follow those rules. And I can't write it off. The CRA is very clear. Things that are $500 valued at $500 or more and has a lifetime of more than 1 year, that's an asset and we have to depreciate it. There are a couple of other tax rules that go in there, but that's a pretty good rule of thumb. And so I end up with people just in tears going, well, but I don't have the cash to pay it. Yeah.
I think those are very strong, because I remember the when I was starting the first year. So in the beginning, you're so small, you can do a bunch of stuff alone. And then after the first year, I did my taxes with my accountant, and he's looking at everything. He's like, okay, man, you're in the clear. You don't have a lot of cash flow. You don't have a lot of sales. You spend a lot of money to start this whole thing. You were buying things, investing. So like everything is good. Then a couple of years later, and then the corporate tax came the first year. And I was like, what is this? What is this tax? He's like, you told me that I'm going to pay no tax. He's like, no income tax, because exactly what you said. He's like, you can reduce your income, but don't go applying for a mortgage or for any credit for that matter, because you're showing zero or very low income. But the corporation made money, and I'm like, yeah, I'm like, the corporation made money. And then he looks at me, he says something that stuck with me for years. He's like, so you're making money, but you have like no income, or like no you have like massive debts or something like that. I'm like, well, kind of, not really, but I'm like, you know what I mean? And he's like, well, it sounds like you were like really bad at business, because there's no way that you make so much money and that you don't want to pay anything in tax. Like, it doesn't work like that. He's like, you made the money, you will pay tax on it. Yes, on some things you can save. For example, your income, you can draw it as a dividend, you can draw it as a salary. You can apply for subsidies for salaries if you have a student, if there's like all these programs, like there's all available stuff. There's no hocus pocus magic that we're doing here. But I was under the same kind of misconcept of, wow, I thought I can expense a bunch of stuff. And he was the same thing as well. Because I had a business buddy who was like, hey, a buddy of mine was a story. When he was like, stop saying a buddy of mine, why don't you lease a vehicle? I'm like, I really don't need to lease it. I don't need a vehicle at all. Like my kids are very small. I can walk them to school. Go to the accountant. I'm like, how about leasing a vehicle? He's like, do you need it? I'm like, not really. I just want to expense it. Like, do you have the money? I'm like, not really. I just want to expense it. He's like, stop saying I just want to expense it. You don't have the funds, right? So
Yeah.
just you're not going to lease a vehicle. Just go forward and, calculate and plan your income on corporate and plan your income on personal and call the CRA and set up a payment plan. And that's what I did for the third or fourth year. Set up a payment plan. I called them and said, hey, can I chuck this up in pieces? And the CRO said simply, you can do it month after month. You can't have like a quote unquote like a payment plan of like three,
Mhm.
three, three. Just it's month after month. And if you want to delay it, call us. We delay it for 1 month. Then everything kind of started to click, and we had many conversations just about like reconciliation and stuff like that. And I feel like what do you explain about the HST, how that works? And bookkeeping is not just data entry for sure. I've seen that
No.
from you. I've seen it with a lot of people. It's a big misconcept.
Yeah. And you bring up a really good thing. Sales tax. So there's HST, there's PST, there's source deductions, there's corporation tax. The accounting world, we call that tax. And because of that, we're using language that confuses people. And so, oh, you told me I owed nothing in tax. Well, yeah, but you still have your HST. Oh, well, I didn't know that. You told me I owed nothing in tax, right? And so that can get people into a lot of trouble. Know how much you owe for your HST obligations. Never get behind in your source deductions. That is the easiest way of getting in trouble with the CRA. And if the CRA ever does call you for whatever reason, and it's frustrating, it's super frustrating talking to them. I get it. Be polite, be understanding, answer the phone, don't ignore them. When they ignore you, their bark's a little bit bigger than their bite, right? But the only bite that they actually have is assessing you lots of money. Just the other day, I had a client of mine call me up and he's really upset because the CRA phoned him and it was about a GST and it was obviously our fault and whatnot. And we went, okay, first off, tell us what the letter said. Well, what letter? They called me. Yep. They would have mailed you 2 or 3 letters before they called you. Oh, well, I might have gotten a letter. Mm-hmm. Now, it turns out by the time we finished reading this letter, it was, yep, it's just a misunderstanding and how the numbers are read. Let me send it a letter of explanation and went up. But by the time that phone call happened, because the letters were ignored, they turned around and said, well, we assume that our calculation is correct, so you owe us $8,000. And he's yelling at me, I don't have $8,000, blah, 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 blah. Right. And so if he had picked up the phone the first time he got the letter, or had he responded to the letter, even if the response is, I know I owe you an answer, I'm asking for a 30-day extension. Or, whatever. They only give extensions up to 30 days. And then you can ask for another one. And then you can ask for another one. But you actually have to call them and talk to them. And if you are a charity, make sure that you are paying attention as to who is authorized to talk to the CRA and figure out a way. It's frustrating, but figure out a way of getting online because that's the way that the CRA is going. Boards change all the time. So it's unlike a business owner. I have a corporation. It's tied to me. If I phone the CRA, they say, who are you? And I say, I'm Stacy Stanley Young. And they're like, great, I'm going to talk to you. And I'm there for life. But boards change very frequently. And it is exceptionally frustrating nowadays when I come in as a bookkeeper and I'm like, okay, I want to log into your CRA account. I want to see where we're at. I need to look at your GST. We need to file GST rebates, whatever. We're not online. Okay, so we can figure out a way to get you online. Let's phone the CRA. You've been around for 10 years. will assume that you are an authorized personnel, and you phone the CRA and they're like, we've never heard of so and so. And now I have to start the process of, well, who have you heard of? Well, we can't tell you that because you're not an authorized person. And you kind of catch in that catch-22. And there are ways around it. I just got online with one of my clients. It took us 9 months. So this isn't fast, but it's doable.
It's doable. When there's a will, there's a way.
Yeah.
Now, we talked about a lot of these things, and the last piece of the podcast, I want to talk about a little bit of the changing trends that you mentioned in the beginning slightly with AI, with all these things that are happening. What are the new stuff that you see that are in bookkeeping, changing trends, or in which way do you see it as going right now?
Accounting as a whole has done its biggest change in the last 15 years than it has since the invention of the computer. So remember, accounting's been around for a while. I always say it's the second oldest profession in the world because the oldest profession needed somebody to tell them how much money they had or how much taxes they owed. And we did it for a very long time on a big old ledger book with a feather quill pen that we wrote down all of our, think of Ebenezer Scrooge. He's there. Historically, because of the systems that we had, you were only getting information a month, 2 months behind. That's just the nature of it. And so the computer came about. And when the computer came about, we became, oh, we could be 1 month behind rather than a quarter behind, this is going to help us change our data entry. We can make it faster. I'm not having to do writing things down twice. But in the last 15 years, cloud-based technologies and artificial intelligence has done two things. One, it's made accounting more expensive because of all of the tech investments. But two, I go back to the example. If we're on a great workflow and you upload your receipts today, I can have your books up to date up to today by tomorrow morning. It has allowed us to be able to not only look historically, but to look into the future. As boards, as executive directors, as business owners, you're not alone. We can give you some of that information to allow you to plan. We can give you the information appropriately so that you can turn around and go, so right about here, I'm going to run out of money. I need to pre-look at a loan rather than I really needed to get a loan 3 months ago, and I'm only getting this information now. I think history is a good predictor of future.
Mm-hmm.
But wouldn't it be nice to plan your year and know that you can make those changes this year rather than next year or the year after that because I didn't get it in time. So accounting is pretty advanced these days, and if you are still working in a paper-based system, if you are still working in a system where you are tied to a desktop, if you cannot approve payments while sitting on a beach in Mexico sipping on a margarita, you have to look at your system. Yeah, Excel's cheap, but
yeah. And I remember a buddy of mine years ago when I first kind of was starting, and he gave his stuff to his accountant on an Excel sheet, and the guy came back and said, "Do you have like a from a accounting software or POS software, whatever you collecting these payments?" And he was like, "No, I was entering Excel." So I saw the trend changing quite some time, and what I'm excited nowadays, we're talking about like cash flow. We're talking about all these things that before you looked at historically, and then you look at, okay, next year based on last year, it's like these flight simulations, right? Like they planned the prices of tickets based on how many flights were the previous year. So we kind of tried that, and business is volatile. Things change. Like you can have a pandemic and changes everything. You can plan for those things, but you kind of know your cash flow throughout the year. You know where you can kind of increase it or decrease it. And connectivity, integrations with before if you had, let's say, you collect payments in one way, good luck. Like it was like a software developing engineering kind of thing to connect these two systems. And now you can connect 50 of them at one place, pull them, and it's very exciting to be able to give all of that to your accountant, to your bookkeeper, and then have that clarity for the future. I think that's the biggest trend. Like we're forecasting a lot more before we're just kind of reactive to the past.
Yeah.
Daisy, if people want to get a hold of you and see the magic that you can do for them, how do they do that?
Well, they can reach out by email. My email address is, I make it simple. It's my name, Stacy at stanleyyoung.ca. They can check us out on the web. Our website is www.stanleyyoung.ca. Again, try to make it nice and easy. We do have social media. We do have some Instagram and Facebook, and I'll warn you, tax season sort of hit us, and so we're maybe not quite as up to date on our social media as we should be. And of course, you can find us on LinkedIn. Search my name, Stacy Stanley Young, and we're pretty good at connecting with people.
That's true. Stacey, thank you so much for this. It was very insightful. There was a lot of stuff that I personally learned. So I thank you and I wish you all the best.
Thank you so much. This is fun.